So what is going on? Okay, it's gonna be a super late video. Um, I got something stuck in my freaking teeth, bro. But I'm gonna do this really quick. And yeah, so coming in on the day, okay, we inversed this 4 hour yesterday, right? And then I low key wanted to see like something on the higher time frame get hit, like higher time frame rather than this 1 hour. But it still adds to our confluence, okay? So we're delivering from this 1 hour bullish candle, and I was low-key a little bit late to the market open. I probably got here at like 8:35 because I didn't do some stuff before the day started and whatever. So yeah, we come off this 1 hour for value gap. So let me try to explain something first before we get to this trade recap. Just keep in mind that we um, delivered from that 1 hour. Okay, so I don't gotta explain it again. So today I was trading on my funded accounts, um, my take profit trader ones that I just passed on Friday, which took forever to pass because, as you guys know, I have not been trading too much, and for those you need 5 trading days. And last month I really didn't take too much trades, you know. So yeah, just passed it on Friday. I got like all the emails and shit that I had to go through on Monday. And then like Monday night, I got the accounts and then I can finally trade on them again. And as you guys know, with Take Profit Trader, I did have 5 funded accounts before with Take Profit Trader, but I blew those even though I had a break even and then one loss only in the same day. But somehow I blew it. So yeah, I was super mad at them, so I did not use that firm for a while. But with more experience now and whatever, I know the rules, familiar with them. Um, I traded on them today. I used lower risk and yeah, you before your buffer, I think you should probably trail your stop loss if you're using Take Profit Trader. The reason they have the live trailing drawdown, so when you take a trade and your money goes up, the drawdown trails along with it, like this. So yeah, like it literally just follows, and like if you take a loss, you're done. So that's why you get a trail, at least before the buffer, and then you're good. But I think the reason they have that is because it's daily payouts. Daily payouts is OP. Daily payouts with no consistency. So it's literally just OP. That's why they have to do the trailing drawdown at first. So when you blow your account, they actually get their money back and whatever. So Mech model too. We gotta explain the Mech model, and like how kind of how I see it, pretty much. Um, for Carson because he asked in the comments, so I'm gonna explain it in this video right here. And this first trade on my funded accounts was actually the Mech model. I was half risk on this trade, but yeah. So as you can see, London manipulated, the AMD, which is actually super unfortunate for us because I would have loved these shorts today. So yeah, pretty much had a bullish bias on the day. We delivered from a 1 hour. So the Mech model, in my eyes, all you really need is like a high time frame P to rate, like a fair value gap. Um, and it doesn't necessarily have to be paired with like these lows right here, these high liquidity pool lows, like Asia low, New York PM low, New York AM low, New York lunch low, or something like that. It doesn't have to be paired with those. Like it can literally deliver from like each a 15-minute fair value gap, a 1 hour or 4 hour daily fair value gap. Those are good as well. So you add that as your confluence, Um, so just high time frame for value gap. That's confluence one. If it's respecting that confluence or value gap, and then you also want to see a 5 minute for value gap get hit. And it's going to be a lot better if it's unmitigated, like not touched, or if it's a first presented, or if it's a like. See, this is just for me. Like if it's like a super wide 5 minute for value gap, say like, actually I could probably just find one. It's too choppy over here. Like this one. This is like a super wide 5 minute for value gap. I don't really care about this one. Like this one's like a pretty big for value gap. If we were like, um, this actually might even align along. This like for value gap might align along pretty nice with like the Fibonacci right there. So it actually goes a little bit above like right there. So it pretty much hits this 0.79 almost of this for value gap, which Fibonacci pretty much works for anything. Um, but yeah, they also call this like consequent encroachment, which you guys don't really have to worry about too much. Um, it's just like a tiny confluence, so you don't really even need it. But anyways, like these, the bigger the fair value gap, it's more likely that it's gonna get hit at some point. Um, so yeah, it's also a first presented. Actually, no, this is a first presented, but it's actually just an unmitigated big fair value gap, which is super likely to get hit. And you want to see that get respected as well in the Mech model. And then you want to see the highest time frame inversion of the leg. So that's really it. Um, and then you just target the liquidity pools. Could be a fair value gap, could be a high liquidity pool like this London high or something. Even though it's super close, I'm pretty sure this is a failed SMT. Um, like this high, it's technically, I mean, it's technically not New York AM high, but it's a New York session high. So right there would have been a good TP. And then here, this would have been my TP, but I didn't get all that high. It's you guys don't even have to worry about what this is really. I don't really know too much about rejection blocks, but this is a rejection block. It's usually like it would look like this. It's this like I don't even know what they call this box. Oh yeah, it is the GAN box. For some reason, I those. Okay, it is that box. It's that exact symbol. Okay, yeah. So this GAN box or whatever, um, especially the wick of this downward candle or upward candle if you're going the opposite direction. This downward candle that's in a PD array or something. So like if it's in a fair value gap and then it has like an up candle, shows weakness, rejection, and has like this big wick, like with this big rejection, this downward candle, or the one that's like making the reversal, I guess, if you're going the opposite direction, it'd be this just the wick. This box would be just the wick. And then you can see the 50% gets hit, consequent encroachment, um, and then delivers. So that would be a rejection block. But anyways, so that was my TP for this one. I didn't even get that far because I got stopped out. Stopped out because I trailed. But yeah, so let's get into what the trade exactly looks like, I guess. I don't know. I don't know if that really makes sense. But yeah, that's pretty much the Mech model. It's just going to be a high time frame and then a low time frame and then inversion. That's pretty much it. And then you just target some type of PD array or high liquidity pool. That's all it really is. So you would usually go off of like a 5 minute for value gap after uh, a high time frame PD array gets hit, like a maybe it could be like a 1 hour or a block or something. Um, but I just love fair value gaps way more. So I always use fair value gaps. And our liquidity sweep was just um, exponentially better with this liquidity grab right here. Candle closures past, candle closure past, and whatever nonsense, and then the 1 hour sweep. Okay, so after that, we get the 5 minute for leg up sweep right here, which we got pretty lucky with because it tapped into it right here along with this. Um, Actually, it looks like it just missed this order block. I'm pretty sure there was a higher time from order block as well. Yeah, the 5 minute one down here. So yeah, this initial sweep with this initial sweep right here with no inversion to the upside. We got lucky with, and then we get a money sweep right here. So we obviously didn't take this one after if the 5 minutes get hit, but we get a little money sweep right here, and then we get a full fill plus this order block just adds to our confluence right there. And then as you can see, there's a 1 minute for value gap right here, right? Boom. I don't like this close, but I still would have taken it just because it is an A+ setup. The speed with that 1 minute closure wasn't the best, but I wouldn't have taken the 1 minute anyways. And here is why, okay? Just because this 30-second PD array, this 30-second for value gap was just so much bigger. So that 1 minute was like a tiny little cheeky one, but this 30-second, that's like you'd have to wait for this to get rejected as well. Just because it's so much bigger. It's the same leg. It's the same leg, and it is the highest time frame inversion according to the Mech model strategy. But since this is just so big, I didn't want to see any rejection out of it. So when it inverse, that's when I took the trade, and it was a pretty cheap trade. 16 points, half risk. It's more like 8 points. So yeah, pretty cheap trade. V-shape recovery. Whatever. We were trailing. We probably put stops here. We saw weakness, and then we had to move up. Okay, another little cheeky inversion right there, and then switching to the 1 minute here. It left this fair value gap. I had my stop underneath the fair value gap, but we just got wicked out, which is unfortunate because my TP was like right there, but it's whatever. Yeah, profit on the day for the funded accounts, and then I took a second trade. I think I went back to go finish what I had to do around like over here ish, and then I came back and like ate food, and then like I came back around here, maybe around 10. shorts were looking decent, but I mean, after a big move like this one, I probably wouldn't take unless my liquidity sweep is like super freaking strong. I'm not taking any shorts to the downside here. I'm pretty sure we missed liquidity sweep as well. Yeah, we didn't even take this one. So after a move like this upwards and you leave in a large liquidity pool like this near your game high, you would want to look for a continuation model, which eventually it does happen. It just takes super freaking long and it's super freaking choppy. But it comes down to this 15-minute first presented along with a 1 hour first presented, and it was unmitigated at the time. Um, and I also rebalanced this 1 hour inversion as well. But yeah, we were staying patient here. This is on my evals too. I have 3 alpha futures evals. I believe. Um, so yeah, so I have that. I think this is a oh. I did take this trade too. I did take a stab at this trade right here. There's a 30-second breaker block right here. It looks nasty. I wouldn't. Maybe I shouldn't have taken it, but I did take it. I think I'm pretty sure I went break even. Yeah, that would make sense. But I was looking. I was looking for higher. I would have taken this V-shaped recovery as well, but I would have got a better feel with this breaker block. So I probably went consequent encroachment of this, which is like the 50%. So 50% right here. And then I probably got break even like right over here. But then I was kind of skeptical. Like price action was not delivering, and it was super freaking choppy sideways action right here, as you can see. But we had an SMT down here. We did create 50-minute equal lows, which is like not good for us. But ES did take that low, so we did have an SMT. So I wasn't too worried about it. Plus we had SMTs at the highs as well. I mean, not SMTs at the highs. Equal highs at the highs. 15-minute. I don't know what time frame. I think it was the 30-second. It was the 30-second. So I was kind of skeptical about this trade for sure, because this is the inversion I should have taken right here, right? I should have taken this inversion on the 30-second right here. But price action was like super sideways. So I was skeptical. I was super skeptical. And then we get this big candle up. Added confluence would be this doji candle, which I don't really give two shits for about doji candles. But we were expecting PE raise. To the upside, this is a 3 move drive right here, which I have seen just such like market experience, like a 3 drive move to the upside or to the downside or whatever. It took freaking 3 freaking swing lows just to get it moving, but I have seen it before where it does that. So with those 2 added confluence, I did just take a stab. I did take a stab at it just because the stop was so cheap as well. So with evals, I don't really give 2 shits about like position sizing unless I'm like 3 contracts in. Like 3 contracts in is like way too fucking much. Like that is just a horrible idea. That's pretty much full porting. So if you want to do 2 contracts, I wouldn't be mad at you. I usually never do that though. But with a small stop like this, I probably could have done it, especially on the evals as well. Unless I had like an insane buffer on my fundeds too. Otherwise, I'm just using one mini or maybe even 15 micros. 50 micros would be good too. Um, but two is just kind of a lot for me. So yeah, full risk, one mini. Um, it literally played out as soon as I got in, like no wick left behind and shit. So that was pretty good. I went break even pretty fast in under a minute. Right here, this is my break even. Um, so evals were looking clean. Um, and this is just the price target right here, just New York aim high, which is a large liquidity pool. Okay. So I don't know if you guys need me to really explain my confluences, but pretty much just the 1 hour and the 50. Or yeah, I mean, you guys already saw my confluences. So that was pretty much it. I took a nap, woke up, worked out, finally, and shit, and then yeah, slow burner, bro. Slow burner. Testing my patience. I was so sleepy, bro. You have no idea, bro. This freaking dude Mason got me up. Freaking, what a loser. But anyways, that was pretty much it for the day. Yeah, but I go watch a movie and chill probably. And Rounders is free on YouTube with ads. But I'm about to watch Rounders. I went to poker night yesterday. Not yesterday. Was it yesterday? No. Yeah. Yeah, it was yesterday. Um, yeah, that was pretty fun. So I could do a trade right here. Not a trade, but like, bro, I forgot what they call it again. Mock trade, bro. Mock trade. Do a mock trade right here. I bet it shows up right here. So the Mech model right here. So your confluence would be this 1 hour and this 15-minute for value gap that gets hit, right? You see this 5-minute retracement. Boom, 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 boom. See what time frame would it be on? Same thing, pretty much same exact thing. Um, it's got to be a 2-minute, I would think. There is a 2-minute. Oh, it looks like you would have got. Technically, you would have got break even if you went break even. Unless you go break even at this high, which is fine too. I wouldn't be mad at that. But yeah, so the high time frame liquidity sweep would be the 1 hour and the 50-minute, which was same session, like but like a little bit before, probably like an hour before. I don't know. Um, and then you get this 5-minute for value gap retracement. Respected. You also get a money sweep right here as well. But yeah, stays respected. You get an inversion. See, this doesn't even inverse, so like yeah. So you wouldn't have taken this one, obviously. But this one does inverse on this 2-minute right here. So it's 2-minute inverses. You could even get a fill from this for value gap if you wanted to. Let's just say we did. Your stops are right here for 10 points, which is like $200 if you're using one mini. Your break even would be 30 points, which is actually fine. I wouldn't be mad at that. And then this price target, I'm pretty sure is an unmitigated 1 hour. So Asia's delivering from that right now. Super choppy like, which you shouldn't be trading Asia, but there is probably a setup somewhere in this freaking mess. You got a money sweep right here. There's probably an inversion like right here. Looks looks like it just got retested, so this could inverse to the downside and deliver. But this is just accumulation right now, and whatever. And I just do not recommend trading Asia. I've been there before. But yeah, that's your whole setup right here. Full delivery. Right there. For 88 points. I'm pretty sure this is market open though. Yeah, that was market open. But something like that. Maybe you had a live account or something. And there's a mock trade for you guys. Yeah, pretty simple. Mech model, pretty much every single trade. So that's just what we do. I don't know if I explained it that well this time, but maybe I did. I don't know. Just let me know. So yeah, it's just a high time frame, low time frame for rally gaps, and then an inversion of the highest time frame of that leg. But manipulate it to your own confluences, your own reasons. You're your own trader. Add more confluences if you want. Trade different styles if you want. Like, it's pretty much the same thing. You just need those three freaking main ones for sure. Those three main ones for sure. Liquidity sweeps are like the biggest freaking thing. And then second is like just for rally gaps. Okay. Yeah. And you don't need a daily bias with this one. I was telling Ryan this and shit, like, coming in the day with a daily bias is not the best idea. Because it could switch, right? So say you get this big move up, and like I actually saw a trade set up here, like a little cheap one. Say you take this one right here, this 1 minute inversion right here. So you get this liquidity sweep, whatever. You're in the rejection block, whatever. That's your liquidity sweep. I think you're also sitting in a 15-minute first presented, maybe in 1 hour. But you're just gonna have to believe me because I don't want to look right here. So this candle inverse is right here. And then you can catch retest, whatever. It's super choppy. You might want to, just because it's super choppy. But get 11-point stop right there. Which is $200 full size, like $220. Like if you came into the market with a bullish bias, but this short presented itself, and you don't take this short to this 15-minute first presented, unmitigated first presented, you have like a 1 to 9.44, which is 106 points, which is $2,000 off of one mini. Like you missed this opportunity if you came in the market with a singular bias. Like I probably would have taken a stab at this just because it's so cheap too. But I was gone. So yeah. Kudos if you took that one too. And I just gotta delete all this stuff for tomorrow. I'll keep that one. It might hold. I'll just keep it just in case it holds. But yeah. It's mitigated now. Unfortunately. Look how nasty it is. You don't want to be trading this. See, market opened at 8:35. Manipulated at 8:35. At 7 to go 30 points in 2.5 hours. 30 points in 2.5 hours. So you don't want to be caught in that for sure. But that is it for me. 30 freaking minutes, bro. And I'm not editing it. I did 3 trades, so that's like 10 minutes each. But I feel like it was like super freaking quiet in here, and I've just been talking to myself for 30 freaking minutes, bro. Anyways, any questions? I lucky just make these videos for my friends, anyways. But thank you if you watched the whole thing, and I will be likely trading the rest of the week, and the rest of the month, except for one day, which I think is a bank holiday. So, see you guys tomorrow.